Good afternoon, everyone. Am I audible?
Hello
Am I audible?
everyone, are we audible?
Yes, you are audible, Dipanshu ji.
Thanks for sparing time. I'm Dipanshu Goyal, Managing Director of Creative Graphics. This is now we got listed on 9th of April last year. So I just give a brief description again about our company. Creative Graphics was started way back in 2001 and it has been a long journey. We have a primarily three types of business. One is a flexographic plate. This is called Creative Graphics. Second is pharmaceutical packaging, which is all about the cold form blister and other allied product. Third is CG Pre-Media, which deals into software services, mockups, and all these kind for the large organizations. So there has been a long journey. We in Creative Graphics, we are the market leader for the flexographic printing plates. The flexographic printing plates are the essential ingredient for making for print, for the packaging, and so many other allied services. If you see any of the Tata Salt or Surf Excel, all these kind of products, right from milk to toothpaste of yours, to children notebook, to paper cup, it has a long, wide application. Industry as it promotes sustainability, it promotes shorter run, it promotes economical conversion. This is worldwide accepted, but in a country like India, it is still in a niche place and is going at a very fast pace. We have got 8 factories around India, across India. We are coming with 2 more, which we have recently announced, which we have already procured the machines. One in Oman, which we already set up a company there. And we have already procured machines. This should be actually commercially workable in Q2, both of them. Second is Warren India, which is the fastest growing company in the pharmaceutical packaging sector. We started almost 2 years ago, and we are doing fabulously well in this company. We are growing at a very good pace. We are currently supplying, we are primarily manufacturing cold form blister, that is called alu based foil. Alu based foil is a foil which you see in a medicine. There is a medicine which comes with a cavity, with a clesh, which is a very, very critical process. We have a current capacity of close to 8,000 ton per annum, which we are converting now close to 70% of the conversion right now. We are adding another capacity, which was supposed to come in the Q1, which has been delayed because of unavoidable circumstances by the supplier, which we are importing by the topmost manufacturer of the world, that's Bobst, Italy. Now it is in the H2, it should be commercially workable. Secondly, in cold, as we have been supplying to long, we have a close to 300 plus clients now in Warren. We are currently supplying to companies like Torrent, to Alchem, Aristo, Intas, Zydus, Cadila, Sinochem, Acumes, Tirupati Life Sciences, Innova Captap, and so many. This list is growing at a very fast pace. Pharma has a very strong entry barrier, but God has been so kind and the team has been so fortunate, and our product has been at a right time, at a right place. We are able to break in at a very fast pace. And with the added capacity, we are sure that we'll be able to do much better commercially. Secondly, we are also adding allied services. We are making a basket of the products. We have procured two good machines from a company, Radha Madhav Corporation Limited, through NCLT, which one is the PVDC line, is a 4-stage pachyndrum line, which is not available It's a very heavy investment. If you go to buy, if you want to buy a new machine, we could procure at a very lower cost. Same is with the tandem extrusion machine, which in the last stage of installation, we would start commercial production by Q2. So this is something, and also we are looking forward to grow in a multiple range. We have so many things coming in this critical years for us. This is a lot of companies are in the process. The big company are in the process of like Arbindo's and Alembic and so many others. Some they are in the process of getting us verified. Getting us into the verified supplier list. We hope to get into that kind of a list, and we'll have a we are hoping and very positive that we would have a good commercial sales in coming year. So Pulkit is our CFO. He would take you around the financial part of it. Pulkit, over to you.
Thank you, Dipanshuji, and good afternoon to all of you shareholders. Thank you for taking the time out and being participants in our growth journey. This year has been a fantastic year in terms of the transformation that the company has gone through. And again, thank you all for your support. We have received support from all quarters. As Dipanshuji said, we have been at the right place at the right time. And the team has also done a fantastic work. This year was a first for us in many ways. Our flexography business crossed 100 crores of top line for the first time in its history. Our consolidated business crossed 250 crores of top line for the first time in its history. Our bottom line, consolidated bottom line, crossed 20 crores for the first time in its history. So we are making a lot of firsts in our history, and we are just getting started on our journey because we are in the early phases of our expansion journey. As Dipanshuji mentioned, we have taken some aggressive steps in terms of our expanding our capacity and capability in the last financial year, most of which will start accruing results in the coming year. So as I mentioned, our turnover has increased 91% year on year for the full year. For the last 6 months of the financial year, we did around 140 crores of turnover. This is higher than the full year turnover of FY24, where we did 135 crores of top line. So, and this is only the start. Our Warren capacity was at an average capacity utilization of 50% for the full year because we started at a 20-25% capacity utilization in the beginning of the financial year, and subsequently continuously increased our capacity utilization month on month. So the average was 50% for the full year. The full year impact of the capacity utilization will be felt in financial year 25-26. So there is some natural growth that will come from that capacity expansion. In addition to that, Dipanshuji has mentioned that we are already preparing for the next leg of growth, as is also mentioned in our press release, which came alongside our financial results. We have made several small acquisitions, which are very capital efficient. We have procured two significant machineries at almost 10% of the cost of a new machinery, and those machines should start commercial production in the coming quarters. So we are hopeful that those results will add on top of what we are expecting in terms of organic growth. The growth should also come from the flexography business because we are adding two new facilities to our existing 7 factories. So, and again, as a first in our history. One of those factories will be overseas. So your company will no longer be a India-centric uh, company only. We will have at least one manufacturing facility in our flexography business in the current financial year that will be overseas. And we will also have operations overseas in terms of sales because we have been focusing on the export market significantly in the Warren business. So overall, that is the picture that we are looking at. Please, when you analyze the company year on year, please do make sure that you have two things on the back of your mind. The first thing is that the profile of the company is changing significantly. Until 15 months ago, the company was 100% flexography business. Now, 60% of the top line comes from alu foils, which is the Warren business, and 40% of the bottom line comes from the alu business. And this ratio will continue to increase because we are investing significantly on the Warren side. We have seen, by God's grace, we have seen very high growth in that segment, and we intend to press the pedal uh, on that side. We will also continue to invest on the flexography side also, as I mentioned. So when you analyze year-on-year performance, please do make sure that the consolidated numbers reflect the changing mix of the business, and that will reflect in margins and everything else. With that said, I think I will let you guys ask questions now, and we can deep dive and answer any questions that you have. Please raise your hands and we will unmute you for your questions. We have the first question from Prasenjit ji. Prasenjit ji, I am going to unmute you now.
Hello, Prasanji. Am I audible? You're still on mute. Pulkit is still on mute, I suppose.
Prasenjit ji, can you will have to unmute yourself. I have allowed you to unmute yourself. Prasenjit ji, can you hear us? We will move on in the interest of time. We will move on to Tushar Agrawal. Tushar ji, I have unmuted you. Hello.
Hi, can you hear me now?
I can hear
you are
you,
audible
yes.
now.
Hi, Dipanshu ji. Hi, Pulkit ji. Great set of numbers. I just had a quick question. Wanted to understand what are the EBITDA margins in all the three businesses, and how do we see the mix of all the three, businesses going forward in FY26 and 27?
Sure. So the consolidated EBITDA margin was around 15% for the overall business. For creative graphics, it was 18% plus, which is the sustainable rate that we have been mentioning in past discussions as well. Warren, please keep in mind the utilization is suboptimal for the full year because I mentioned the overall capacity utilization for the full year was only 50% because we started at 20-25% capacity utilization at the beginning of the year. So the EBITDA margins were 11%, but we expect these margins to improve as the full impact of the capacity utilization is felt in the current financial year. Plus the expansion that we are seeing that we are going through should also bring some economies of scale in the Warren business. Overall, I think you should assume EBITDA margins of mid-teens for the combined business for the next 2 years.
Got it. Thank you.
I have a question from Deepak Podarji. I will unmute you now.
Yeah, am I audible?
Loud and clear, Deepak ji. How are you?
Yeah. And first of all, many congratulations for a good set of numbers. My queries is first up, I think we have achieved around 92% of growth, which we were targeting kind of doubling the revenue. Now for next 2 years also, we had said that in the past as well of kind of doubling our revenue. So next 2 years also we can expect similar 90 to 100% kind of a growth, uh, uh, reaching to 1,000 crores by FY27.
Deepak ji, we are not giving any financial guidance, but from an overall trend perspective, um, we would like to state that yes, we are looking to double our top line year on year. It might not happen every year, but that is the trend we are looking to follow.
Okay, and that is in spite of some delay in this Warren new capacity of 12,000 metric ton that we were expecting to come by second quarter, but it has now been delayed to second half.
Yes, that is in spite of that, which is why I say that it might not happen every year,
Mhm.
but that is the direction we are taking.
That is the
One
trend. I
quarter
mean,
here, yes,
in terms of doubling our revenue year on year. Okay.
yes.
And secondly, on the margins, I think we saw good improvement in margin to around, I think, excluding other income, second half margin were close to about 13.8%, right? And given your capacity utilization was only 50% in Warren, ideally this margin should have a upward tick, right? So this margin is sustainable as we go forward, and what sort of aspiration we can have as we go towards optimal utilization level?
As I've already said, Deepak ji, mid-teens is the sustainable level. The profile of the business will be such that there will be a flexography business which will be high teens margin. There will be a volume business, which is the Warren business, which will be a low to mid-teens kind of a business. So the average should be somewhere in between, depending on the business mix in any quarter. We are again not giving any exact guidance, but that is the sense we can
Yeah.
leave you with.
Yeah,
Yeah,
that's fine. I mean, but mid-teens, when we say mid-teens, we're talking about what? 15 to 17%? That is the range one should look at?
I am not giving that kind of a guidance, right?
Okay.
But
So,
mid-teens, yeah,
and it should be higher than the current level. I mean, at least that is what we expect. I
yes,
mean, okay.
yes. As
Current,
as
the second half.
capacity, as the full impact of the capacity utilization comes through, I would uh, I would believe that the fixed costs will not rise in tandem with the turnover. So yes, mathematically
Correct.
that should happen.
That should happen. And we're talking base as a second half margin, not the year end, right? Second half, whatever
Yes,
margin we have.
yes.
Okay, fair. That's very clear. And just my third and final question revolves around your new capacity on Flexo. Can you throw some more light? I mean, this is something new you have announced, right? I think earlier we have not spoken about increase in capacity in Flexo. So what is the plan there, and what sort of capacity increase we are targeting, and what sort of incremental revenue potential it brings along?
I will let Deepanshu answer that question. You are on mute, Deepanshu.
Deepak, can you repeat the question once again, please?
So I was just trying to understand. I think the Flexo capacity expansion is something new we have announced. Earlier, we have not discussed on that. But
Yeah.
now, so can you throw some more light? What we are planning there? What is the incremental capacity we are planning, and what can incremental revenue it bring?
So Deepak, as we have already told you, the creative is looking for grabbing of any opportunity which come across. So there has been opportunity when we were talking to some of the clients who were willing to accommodate us, because there have been not even a single flexographic printing plates unit in whole of the Oman. We found a huge opportunity, as it is a gateway for whole of Africa and the Middle East for us. It actually reduces the TAT, reduces the cost, and we are very, very enthusiastic for this facility. So there is a huge buyer who approached us. He wanted us to establish this, and we latched onto this kind of a opportunity. So as far as Bangalore is concerned, it was always on the cards. So that is what. So any opportunity, we are not shy of taking any step.
And what is the increase in capacity? What is our current capacity and where we want to make it to?
So as far the flexographic plates are concerned, is not regarding the capacity only. We still have a huge capacity. It's more of a geographical placement. It is all about the giving a better service, reducing the TAT, servicing a client. So closer to the client, you get always a better business. The volumes automatically grow. So we are just doing with this kind of a strategy. Capacity is still we are having a huge capacity when it comes to the 100% capacity utilization, which is not going to be applicable in creative graphics side.
Okay, so what is the utilization level right now?
I suppose it is close to 60%.
Oh, so we have got a good scope. I mean, at least 50% scope to increase. So in terms of, I think, revenue, we did about 100 crores in Flexo, right, this year.
Deepak ji, I would urge you to come back in the queue.
Yeah, fair
Please.
enough. No problem. Okay, thank you very much.
Thank you. We have the next question from Prasenjit ji. I am unmuting you. Prasenjit ji, I believe there is a issue there. We have the next question from Hasmukh Gala ji. Hasmukh ji, I am unmuting you. Hasmukh ji, please ask your
Hello,
question.
can you hear me?
Yes.
Yeah, you're audible, Hasmukh.
Hi, sir. Very good sense of number. So again, my question is like, what is our strategy? Like we expanded ourselves in outside India for flexography, and in the last call, if I remember, you said that flexography is kind of a muted, uh, and that's why we shifted to alu to for expansion. So, like, what kind of numbers can we achieve from flexography with this expansion? Is something in, I mean, if not exact numbers, like if you could just take it this much growth is possible or something like that would be helpful, sir.
Hasmukh, we never said it's a muted market. We have been very aggressive when it comes to the growing market of flexographic plates. It has been a muted year or two within, but we are very enthusiastic when it comes to flexographic market, given our leadership in this segment, given the kind of credibility we have built over the period, given that there is a push from the government towards the sustainability and EPR now pushing on. We are very confident the market will grow at a very fast pace. So the expansion towards the pharmaceutical packaging is not because it was a muted business not growing well. It was an opportunity we found. We found there was a gap in demand and supply when it came to the critical pharmaceutical supplies like cold form blister. So it's a simple strategy. It is not nothing that we find somewhere that there is an opportunity and we have some kind of a edge over there, then we try to take it. As far as the numbers are concerned, we are looking at aggressive growth. I think we can't give the number, Pulkit, right?
I'll just leave you with the sense that we have 7 factories as of today. We are launching 2 new factories. So that is the kind of growth you should assume. Obviously, the growth will not happen on the first day when we launch the factory. There will be a curve, basically, in which the capacity utilization will increase.
We've got 7 factories and 1 joint venture in Kolkata, so total 8 factories. With the 2 more addition, will be total 10 number of the facilities.
Yes.
Wow, sir, that's great. And sir, in terms of Warren's capacity, last year we were on an average of 50%. So this year, what kind of capacity utilization will be there? It will be 100%?
So as far as we are targeting at least 80% of the capacity utilization in the earlier facility, we are adding this because we understand we are foreseeing a huge demand in this segment. We are also getting verified by a lot of audited and verified by a lot of big clients. We are hoping, and we are also very, very aggressive when it comes to the export. There's a lot of inquiries coming on. So I think we will, as far as the capacity utilization is concerned, we should easily do not less than 80% in the earlier facility, and in the new facility we will be adding incremental growth into it.
Wow, sir, that's great. That's it from my side right now, sir. If I have any other questions, I'll get back to you. Thank you.
Thank you. The next question is from Rohit Unadkat ji. I am unmuting you now. Rohit ji, if you can please ask your question.
Yeah, hi. So first of all, congrats for the great set.
Thank you.
You mentioned about taking over some company out of NCLT. So if that you can just explain, and any other plans for acquiring some other companies first. Second, I think you mentioned about expanding to newer factories. So can you also brief about that? Like how can that add to your, as you said, it might take time to add to top line. But what are your future plans, and what are my motivations to stay invested for longer duration? Let's say you go for main board in 2 to 3 years. So what should my motivation be? Thanks.
So motivation is simple. We want growth. We want a sustainable growth. A company is born to make profits. We want healthy profit, healthy growth, and that is the only motivation for not for me, for every entrepreneur. So as far as the NCLT is concerned, we were looking forward for the synergetic lines. If you think that all the customers we have, they have an inherent demand for the synergetic product which we are adding. So one, this tandem line, if you see, is only 1 or 2 facilities all across India, rather one. So we see a lot of opportunities in this segment. It has a very, very big export potential. Same with the PVC, PVDC. The same set of clients have been asking us to add this. So we think that that is a very, very good capacity builder. The capex which we incurred was much less than we could have anticipated. So we latched onto that kind of a opportunity. So as far as the Warren is concerned, we are looking to consolidate. We are just trying to become a major player in packaging segment in coming years. And what was the second question?
Rohit ji, just to clarify, we have not bought any company out of NCLT. We have bought assets, machinery from a company that has gone through NCLT. These assets are very targeted assets, which we think are valuable to us and will add significant value to us.
Okay. Any government policy or any PLI benefits for us? Thanks.
So government, I know it is now more of a state kind of a thing. If you go to different states, I suppose there are the different subsidies. As far we are now, we have not been anticipating any PLI or something. We are totally on our own. We may try because there are some kind of MSME services which may avail in coming year. We are just looking forward. We are just consulting with a lot of agencies, but that is not a target finally.
Thank you. Thank you.
Thank you. The next question is from Gaurav Agarwal. Gaurav ji, I am unmuting you. Please ask your question.
Hello, sir. Hello, Dipanshu ji, Pulkit ji. Thank you for the opportunity and thank you for conducting the call. Again, very good set of results. So, sir, on the flexography business, if you can help me understand the impact of the EPR norms, because every year government is implementing stricter and stricter EPR norms. How is our flexography business stand to benefit with these norms, and how do you see way forward for this business?
A very good question, Gaurav ji. You know that now with the EPR norms are being implemented and there'll be a huge impact in coming years. Let me tell you, it is all about the sustainability. It is also about the recyclability. So when we have a process like flexography, it enables us to one, use a recycled product. Second, it uses a monolayer. The advantage of flexography is the major advantage that it uses a monolayer instead of having a multi-product layer, which makes it a recyclable product. So we see that everybody incoming, the companies are targeting. We are talking to many companies who have to go to flexography way. They were maybe some reluctancy because there is a major change in the kind of a current supply chain scenario that nobody wants to disturb that. But now with this kind of EPR norms coming on, sooner or later they will have to go that way. We see there's a big opportunity for whole of the flexographic industry, be it the machine manufacturer or the converters or suppliers like us who are into flexographic printing plates.
Sir, any early successes or any early signs, like getting inroads at a major customer? Maybe not now, but are we trying to get inroads in some major vendor, major brand?
So I give you example of Tata Salt, which was earlier a multi product, which before they anticipated and was converted to monolayer through a flexographic printing plates. I give you example of Unilever, Surf Excel, and all these have been converted from gravure to flexo in a monolayer structure. Now they have become recyclable. We are talking to PepsiCo, which is coming from a gravure to flexo. If you see Maggie, all these are still gravure printed. We have a multi-layer structure which cannot be recycled. But with these norms coming, they are looking forward to convert from gravure to flexo. And these are the early signs, and we are very enthusiastic about this goal.
Okay, so can this business be a 1,000 crore business in 5 years' time because of these regulatory tailwinds and our capacity is
creative graphics business only?
No, only the flexography piece of it. Warren, anyways, is a great business. Great.
So that would be a big shot, Gaurav. I will not overcome it. I think that may not happen in 5 years, maybe 7, 8 years to come. But that is what I think as of now.
Okay. Great, sir. Thank you so much, and wish you all the best for your performance and future quarters.
Thank you. The next question is from Rishabh Joshi. Rishabh ji, please ask your question.
Hi, Dipanshu ji, excellent numbers. I was just, curious if you could throw some light on the working capital days cycle. If I see at a console level, it's sort of been steadily increasing year on year. So I just wanted a clearer picture, especially with Warren scaling up the volume, what you're looking at in terms of inventory days and in terms of, even the receivables cycle.
Okay.
I'll take that question. So if you look at our working capital for the last year, in terms of days, our receivable days were upwards of 150 days. Our inventory was upwards of 80, 90 days. So that was because the business was growing. This year, our receivable days are much lower. They are almost 90 days kind of a receivable days in Warren. In fact, in Warren, we have grown the rate of sales month on month, but our absolute debtors have come down compared to March last year and even September last year. So we are becoming more efficient in terms of stock as well. Right now we have more stock. As of March, we had more stock than is required, and we know why, because it was the year end. It was a time of high uncertainty where we were expecting a lot of supply chain uneasiness because of the discussions that were happening on the global scale. And we were also stocking because we have built 2 new warehouses. But this also should get streamlined. On a sustainable level, you should look at our working capital should be around 90 days overall, including debtors and inventory, and supported by creditors on the Warren side.
That's great to hear, sir. So in that case, can we expect positive operating cash flow going forward from FY26 onwards?
Operating cash flow for FY26 will depend on the kind of expansion we do. So we are also in an expansionary phase. Please do keep that in mind. our operating cash flow has been becoming better month on month, but that will also depend on where we achieve full scale capacity utilization for the full year.
Okay, perfect.
Please,
Thank you so much.
please keep in mind, in the Warren business, we have to first produce the material and then sell it. So the stocking of inventory and most of the raw material is imported. So the stocking of raw material happens ahead of the sales.
Correct. Makes sense. Okay, excellent. Thank you so much, guys, and all the very best.
Thank you. The next question is from Nikunj Urania. Nikunj ji, I am unmuting you. Please ask your question.
Hello, am I audible?
Yes, you are audible.
Thanks for the opportunity. First of all, congratulations team for great set of number. I have only one question that earlier call I have read that we had purchased one property, either plot or shed in Noida location maybe. So at that time we don't get a possession and we have leased some other plot for like installation of machine and for the factory. So can you share some detail on that and how can we utilize this for our growth?
Yes, sure. So Dipanshu ji, you want to answer it?
I could not understand the question very well because
He's
the
asking
voice.
about the plot that we have in Noida, the plot that we
What
had
plot?
purchased. Plot.
So we have a plot. We got it registered last week only. It was being delayed by the Noida authority. We have to get it functional. We are looking forward to sell it off to improve our working capital and to reduce our debt.
Okay, thanks.
Thank you. The next question is from Vasu ji. Vasu ji, please ask your question. Vasu ji, can you hear us?
Hello, sorry, can you hear me?
Yeah,
Yes.
we can.
Yeah.
Vasuji.
So firstly, congratulations on the strong results and
Thank you.
also thank you for the opportunity. So Warren is clearly driving the top line growth. So can you share like any revenue breakdown, like any key customers or like is there any international business here? And also, are there any other plans to launch new businesses? I believe like Pulkit ji mentioned the revenue target growth rate would be 100%. So would it be mainly coming from Warren and flexography, or like are there any new businesses that the company plans to launch in the next 2 years?
So as we discussed, there is a split of 60 to 40% between Warren and creative graphics respectively. As far as the numbers are concerned, we don't have any other business line apart from them. The business growth has to come from all this line and the allied services and the synergetic product line which we are creating. It is has been a very strategically thought product mix, which we think that we can get a immediately advantage of, given that kind of a bias base we have built over. So that is a simple line of business, Vasuji. We are not thinking of any other business apart from this Warren and this. That is very clear.
Yeah, and what about the revenue distribution? Like, is it diversified across several customers today, or like, are there any major customers? Or and also
Yes,
any
it is
we have a
diversified.
very,
It
very
is
diversified. Yeah, Pulkit, you go ahead, please.
Our biggest customer accounts for less than 10% of our annual turnover at any point in time. So we are very well diversified across both the businesses.
Okay. Thank you so much.
Thank you. The next question is from Darshan ji. Darshan ji, I am unmuting you now.
Welcome,
Please
Darshan
ask your
ji.
question. Darshan ji, Can you hear us? The next question is from Sameer Midha ji. Sameer ji, please ask your question.
Hello. Good afternoon, sir. Can you hear me?
Yeah, Samira,
Yes, madam.
welcome. You're audible.
Okay. First of all, congratulations on the great set of numbers.
Thank you.
So I have few questions. First is, sir, during your conference call in August, last year, August, you mentioned that at that point of time, Warren was running around capacity of 45%, and you were hopeful that by the end of this financial year, we would be able to reach approximately 80% utilization. So, what were the reasons that it couldn't happen?
No, we reached 75 to 80%. This is the mix you
Madam,
are
I
looking
think,
at
yeah,
from
yes,
for the
madam.
whole of the year from 25 to this kind of a utilization. That is a average of whole of the year, the what you see in the numbers.
Okay, so as of now, we are at that capacity 70.
Yeah,
Okay,
certainly we are.
understood.
Yes.
Okay. And answer that an adjacent line of business regarding the PVDC
Yeah.
packaging lines. So, like you said that it will get commercialized somewhere around H2 of this financial year. So, is it something like that we would need some approvals in order to start the sales?
So first thing it will be commercialized in Q2, not H2. For
Okay.
the PVDC line or this line, they are on the last stage of getting commissioned. So there are certain approvals for sure, and we are on the process of getting those approvals. That includes all these kind of approvals. That is what we hope that by the Q2 we'll start having a commercial sales out of this new expansion.
Okay. And sir, another question I have from Pulkit sir. Sir, as I can see that uh, there is a significant increase in the other assets year over year basis, both on standalone as well as consolidated basis. So can you please elaborate upon that?
Yes, thank you, Samira, for that question. On the standalone side, we have around 68 crores of other assets as of today. 95% of those assets are the investments in subsidiaries. We raised capital in the form of an IPO in our parent company, but majority of the investment has happened in the subsidiary company. To make an investment in the subsidiary company, we have passed the money in the form of short-term loans and advances, which is why that number is showing in the other assets in the standalone financials. In the consolidated financials, because of the intra-group transactions get knocked off, the other assets will appear to be much lower compared to the standalone numbers. That said, the consolidated other assets are higher year on year, as you have rightly noticed. Those are because of the advances we have given to our vendors. Please note that we are buying machinery, we are making capex, we are setting up at least one new factory in the Warren business. So we have made some advances to our suppliers, which are showing in other assets. Plus, there are some GST receivables and input credits that are also showing there. So those account for the increase in the other assets on the consolidated bill.
Okay, sir. Perfect. Understood. Thank you so much and all the best.
Thank you, Samira. The next question is from Somil ji. Please go ahead and ask your question. I have unmuted you, Somil ji.
Hi, sir. Thanks for the opportunity and congratulations on the fantastic set of numbers. Can you help me understand the total capacity in terms of tons for both alu business and the flexography plate business, and the capacity that you'll add that'll get live in the PVDC business?
Pulkit, you are taking, so let me. So as far as the flexographics plates are concerned, it is still at a 60% of capacity utilization. We have a huge capability and capacity to go further without investing any amount in capex as of now, until unless we go as we are investing in the geographical side to improve on the business to get the better market share. As far as the flex or the Warren is concerned, we had an optimal utilization of close to 50%, but on a month-to-month basis is now 75 to 80%, depending 70 to 80%, depending on not many factors of the sales and demand. Right now, with the PVDC, we are adding close to 1,000 tons per month. The average price is close to 250 rupees a kg where the PVDC is. We will start having an incremental market share in coming year. So as far as the tandem line is concerned, there's a lot of product mix. It can make right from the different laminates. So as far as the revenue capacity is concerned of that, we can have a close to 100 to 150 crore rupees of the per annum revenue, depending on the product mix.
Okay, so on the PVDC business, you mentioned annual capacity of 12,000 tons that can fetch 100 to 150 crores revenue on a full utilization basis.
Yeah, so you can calculate. This is more than that, to be honest, because 1,000 ton is the average price is 250 rupees a kg. But depends how much market we get. This is a growing market. This is huge demand when it comes to exports. It depends how soon we get the market share, how soon we are able to fetch the market from the.
Okay, and sir, in each of the three segments, can you please help me understand how big the market is and what is our market share across the three businesses: flexography, alu, and now PVDC?
So if you talk about the market share in flexography, we are the market leader. This market has a few strong players. Then most of the other players are unorganized segment. I would give a very rough figure because at times it is you're not able to find the right kind of amount. So we have a market share close to 16 to 17% when it comes to photographic plates. And when it comes to Warren, we are still in a building space. We are still having close to 8 to 10% of the market share as of now. PVDC, we have a negligible market. We haven't started.
The PVDC, how much of, I mean, 10,000, 12,000 tons annually, how much are you looking to probably utilize in the next year, FY26?
So we should have at least 40%, 30 to 40 to 50% of the market capacity utilization in an initial year.
Okay, so 40 to 50% utilization on the 6 months that it will be live for from quarter 3. Okay, and sir, the 100% revenue growth guidance, does that include the PVDC revenue increment, or is it only?
We are not giving any guidance. Somil, that question is no. We are not giving any guidance. These are the kind of market. Like our aspiration is that PVDC that includes many products. Yes, including PVDC. We are planning to have a growth year on year, but that is the positive intention as a company we have.
That is the aspiration, not the guidance.
Okay, and does that aspiration include the PVDC incremental sales, or
that includes everything? That includes the aspiration is for the company, not for a machine.
Understood. And sir, the incremental working capital requirements, since you're growing at a very healthy rate, how do you plan to do that? A part of it, as you mentioned, would come from the realization from the Noida plot. Uh, are you looking to take more debt? Or what is the thought process?
We are a profit generating entity. In the flexography business, we have been generating significant profits as well as cash flows month on month. With God's grace, even Warren is now generating profits. So we have sufficient internal generation that is happening. We have funds from the IPO as well, and we have unutilized bank credit lines also available. So in our calculations, we won't need any significant debt from outside.
Okay, got it, sir. Thank you so much.
Thank you. The next question is from Tahir Hyderabad Wala. Tahir ji, I am unmuting you. Please go ahead and ask the question. Tahir ji, please ask your question. Can you hear us? We will go to some questions that are on the chat. The first question is regarding the sale of plot and the possession. We have already answered this question. We will use, and I believe they're asking, please share on more details and how will you utilize it for both. We will utilize those funds for growth in by investing them in working capital or for further growth if there is any opportunity available. Margin expectations. Prasenjit ji has asked the question on margin expectations from the PVDC segment. Dipanshu ji, do you want to take this up?
So PVDC is a good product to get into. So we have installed in the process of installing that is a state-of-the-art machine, is a 4-stage machine. This is a very big export potential. I suppose we should have a high teens as far as the EBITDA is concerned going forward.
Darshan ji has also posted his questions. The first question is, any impact of Trump tariffs and recent pharma policy changes on our alu business?
Nothing as of now, Darshan ji.
Darshan ji, nothing as of now. In anticipation of the volatility, as I mentioned in my remarks, we had made some extra stocks as of March, which I think we will liquidate as time flies. The second question is, any impact of recent BIS norms on imports by us? I mean, cost-wise. No, BIS has no cost implication. So there is no cost impact in terms of BIS norms. Any opportunities due to recent India-UK FTA? Dipanshu ji, you want to take this up?
It needs to be explored. We have not explored that, to be honest, Darshan ji. We are just, we don't have any UK buyer till now. We have to explore that opportunity.
Tahir ji has posted a question. I want to ask, like, what revenue contribution are you targeting from Flexo, Warren, PVDC going forward? Tahir ji, we are not giving that guidance as of now. I have told you what the trend is. It was 0% contribution 15 months ago from Warren. As of September, we were, I think, 55% contribution. Now we are at 60% utilization contribution, and this contribution should increase. That is all I can say as of now. We have a question from Nikunj Burania ji. Can you please share the approx value of the Noida plot?
So now this is the time to sell. We will try to find the exact value. Should fetch a good premium. At what price did we buy at?
We won't be sharing the exact value of the plot because we are underway in some discussions for the sale of the plot. Hope you understand, Nikunji. We have a question from Vasuji. Where do we see the company in the next 5 years if we execute really well in terms of product evolution, market position, competitive advantages, and revenue potential?
That's a good Vasuji. Every company aspires to be, as we already told you, we have to double our revenue year on year. So as far the position is concerned, we want to become the one of the major player in because we strive to become the best player, either it is a flexographic printing place or any other business. So now, Warren, we intend to become the largest player and the biggest player in coming years for sure. As far the revenue is concerned, you can calculate yourself.
Those were all the questions we have. I would really like to thank all our shareholders and participants on this call for your wonderful questions. We have one question that has come up again. Who are the leaders or major players in the Alu and the PVDC segment? Let's
So
just
I
answer
have,
this question and close.
So in Alu, we are, our major competition is with a company called Swarm Toil, that is based out of India. And as far the PVDC is concerned, we have a competition with ACG largely and Caprions.
I think that is it. Dipanshuji, if you have any closing remarks.
Thanks. I would like to extend my thanks to all of the investors and everybody who is following Creative Graphics. We had been a small company who has been very aggressive, trying to play a major role in coming years. What are our values are simple, honest, ethical business. We have a simple policy to keep servicing the client, to have an honest approach. Whatever we do, that I can assure that as a Creative Graphics, from my side and the whole of the team and the management, we are poised for a good growth and do a positive business year on year. Thanks for supporting us. Thanks a ton.
Thank you to all our shareholders and participants on this call. Your
Thank you,
questions
everybody.
guide us in the right direction, and we really
Thank you.
appreciate interacting with you. We will continue to do these interactions on a higher frequency. Looking
Thank you.
forward to interacting with you. Thank you, everyone. Bye now.
Thank you. Thank you, everyone.